Good afternoon, Scott Redler, T3 Live. Welcome to today's recap on this Monday, on this holiday shortened week with low volume and a lot of pushing around. So, came in this morning, I think most traders were hoping for some type of gap down to buy it in the holes for what could be a red to green push and maybe some type of oversold bounce. But when you get a gap up, there's always not a lot of room to make money. Especially lately, if you buy a gap up or if you buy things that are on their highs, they typically go lower. Same way, well, not really the same way, but shorting lows has been somewhat difficult too. So after about 2 hours of maybe the bulls getting a little comfortable, or some people thinking that you can get a little bit of a retracement further, the market rolled over, and then once the market rolled over and looked horrendous, they had a squeeze that was relentless into the end of the day to catch anyone trying to add to their shorts or uncommitted shorts off guard. So that is definitely, whippy, erratic, whatever you want to call it, type of action. So we talk about the round trips. There's been so many of them. Don't take the round trip and give back your day. Book money. It's hard to make money in this environment. If you're tactical right now and you're out of the majority of your portfolio positions, which I think most people are, you've been that way for over a month now, or the last few weeks when we've seen the dislocations, or you saw the outside day on April 4th. Now take your trades, narrow your time frame down, and respect the money. And also, they're just catching people, so don't be caught and don't play the cost average game, especially if you can't handle it on your time frame. If you look here at the chart of the SPX, you will see that, just looking at some trends here, the macro trend that started all the way back here in 2011, not even tested yet. This trend that started in November, remember that November bottom in 2012, still lower. And then you had your accelerated trend that broke in the beginning of the year, and then this support area that is now somewhat broken. Okay, so the question is, what is next? What happens during the holiday? Do we retrace back and retest this area, when maybe even push a little higher? Or do we just hover below and fail? And at some point it looked as if we were just going to, throw in the towel and head back down to the 150-day, which is where it held. But again, after a move from 1872 down to 1815, they could do what they want down here, especially when there's low volume. You turn this into the 5-minute chart and you'll see not the easiest environment. Okay, here was your gap up. You had a decent trade here. If you were looking for a bull flag for continuation, still 1825 to as high as 1832. That was about 7 handles. But then if you said, okay, I want to see if there's commitment to this going sideways, because lately there hasn't been, it broke below this channel, and that was some people looking for maybe a short or at least a stop out, and then boom, then right back at the lows, quick little move. Okay, so how do you judge whether or not you should get out of the way? Okay, first of all, if the bears had full control, you would think that they would not have let the market get back above here. Okay, but obviously the bears in this lower area could be pushed around a little bit, especially uncommitted bears. First move, a little bit of an inside bar, continuation, and then they just let nobody out. So with that said, that's a tough trade, and I guess here, that was your out, and then just that's tough, So that's why even if you got short here, and then you got short here, you gotta take some off, either which way. And then you go to something like the the IBB. Look at the size of these round trips. Okay, first of all, the pivot that everyone was talking about, which you have to know, is the 200-day. The 200-day is going to be the dance around to see what kind of weakness it is. If you got out here, or even around here, people are trying it out to see if they can catch a bounce. And people that have been short this whole way are a little worried on, how could you stay short here if it's, getting close to the end? Some people say this is the 6th inning of the correction. Some say it's the 9th. Some say it's the 4th. Who knows? The longer you stay below the 200-day, the more, the better the clues. So anyway, just to show you how hard this is intraday, to trust these things, here is your, if you want to break it down on a daily chart, here was your gap up. Okay, this is all you know right now. You have a gap up. Try to go up, wide range bar, engulfing the 3 bars. So if you're looking for a fade, that was your fade, and then you had a gap fill. And then what happened? If you missed this short here and tried to get short into support, look what happened to you. You got your head handed to you. Okay, and then if you were trying to find, say, wow, this is for real, it just traded above the prior high here of the morning, look what happened next. Boom, 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 boom. And then now you're like, okay, Now I could short below this low because it just squeezed everybody out. Then you did have a trade below. Okay, so here is that trade. Trade didn't work here, but could have worked there. And then if you stayed too long, it came right back to it. So lots of micro trades within here, 3-minute charts, 5-minute charts, 15-minute charts. But I don't see a macro type of bottom like compelling go with it. So like this trade number 1 didn't work, squeezed everybody, hovered here. If you were looking for commitment, there was none. This time, if you shorted here and you didn't short here again, you probably were upset when this happened. And then here on this, you have a little bit of a king and queens formation, and then they squeezed into the close, and that's how we closed. It is what it is. That's what happens sometimes in tapes like this when you're oversold and oscillators are minus 60-ish, and so it's hard to be short after things come in a lot, and you're not really at a compelling spot where you think it's a macro long where you want to buy here and close the door and open it up in a month from now. It makes it hard. So you take your trades. I actually had a little, I guess, success shorting Tesla here because Tesla to me, this was a pretty big level. Remember, I went home short on Thursday into Friday, covered it early, and then there wasn't really much of a rally today. I went red first. So when on the 5-minute chart, when it broke below, there was a few different ways to figure this out. Okay, if you were really looking for a short here, which I wasn't off the bat. I thought maybe it was holding higher, and it could be worth being a long. And then all of a sudden you had your gap up, which was sold quick, and then you had a lower high when the markets made higher highs, and then really you had this 202, and then you had, I figured once it got below 200, you'd get a decent short. So this was on the virtual trade floor. They saw me shorted here, and then I added a little bit below 200, and then covered into the 196-ish area, and then I tried to reshort a little bit here, but lost a little and not taking it overnight. You want to have daily pivots. Your daily pivot here was below 196.60. If you shorted more there, okay, you had to move down to 194.40, which was another $3. But again, you got to take some of these trades, okay? And who knows? I don't think this happens, where from here it goes to there. But this was this was that wedge. So now we'll see as it continues to trend. Now you have a new point of reference, and that's that. A lot of other names, Google and Amazon, they were all up a lot, and then they pushed through a prior high, and then they came below, and that was your momentum pivot. You look at Google, you could break it down to a few different ways. Let's go to Google. Did it more on if you're just looking at like 5-minute charts, because on this daily chart, it's still somewhat broken, trying to hold here at the 150-day. But you go to the 5-minute chart, and there were 2 trades that we were talking about. Okay, one was right here. Right, you had your gap up, came in wedged, and this was a nice trade if you wanted to take it. 544-ish, then 547-ish, and went as high as 553. Nice gap up, wedge, oversold. Take your darn trade. Came below the 8-day moving average there. Hopefully that could have been your stop. Maybe this was your stop before it turned into a rollover trade. And then at the lows, it just bounced up. So it's like 3 different parts of the day. Day 1 part, and you had to wait a little bit. If you chased this, you probably weren't in here. And then I know some people on the site were saying, oh, look at the small head and shoulders top here, left shoulder, head, right shoulder, which would have given you 553 to 550, only really down to here. And then it just came lower. So, there's just a lot of two-way action. Not the best two-way action, but it is what it is. We're not grinding. You were not the market of last year, the year before. We're in a different type of tape where there's opportunity if you take the trades and you don't sit in there for the round trip. Don't give back your money. If you want to trail, give back a third or give back half. Try and stay green, and then at some point, if you're like, well, I got out of the way and I sold the stocks when it broke the 8 and 21 day, I want to hit it hard when we get the signal. I understand. I'm in the same boat. I feel like I got out of the way, went from portfolio approach to tactical approach, didn't really get hurt. I haven't made as much as I historically make in a month, the last month or 2, but still green, making some money that I too want to be able to get a good entry, hit it hard, stay there for a nice swing trade, but that's going to, I think, take some more time to develop. And we'll hone in on 4 or 5 names that show relative strength, and when we get to compelling areas in the market and we really feel that signals are there, we'll try and get through it together and make sure we could, hit it hard. Because I remember here, Everyone also was like, red dog, red dog. You know, you get at a tactical approach, or portfolio approach when we broke this, okay, if you remember here, in the beginning of the year, okay, so I missed the 5% to the downside, but then I made money on the upside, but I didn't take advantage of this red dog reversal the way I could have, because that's when everyone was saying we're going to be down 15, 20, 25%, and we had a red dog reversal, crossed above here, you know, penetrated and then made new highs. So this time, after getting out of the way, perhaps somewhere in here, I don't know exactly what day, it could have been somewhere in there that you had that push through failure here, or maybe this outside day here. I also want to find a nice pivot spot, see commitment to it, see better action, and get a different type of trade. But we don't know where that is yet, and we need more clarity. So let's just wait for it. And until that happens, take trades, move your feet, get long, get short, move around, measure the action, and then at some point things will line up, and then that's when we could try and get it a little bit bigger and stay a little bit longer. So until that happens, I just don't think it's the best way to go, especially to keep your sanity. If you're celebrating Passover tonight, have a great holiday. I will be going home, having some matzo ball soup, some gefilte fish, and some stuff prepared by my Italian wife. So hopefully you have a nice Seder and enjoy your family. See you tomorrow morning at the call. Have a good night.